Assalamu alaikum. I am Udepa. Today I am here to present an information about the Islamic finance system. And first we discuss the introduction of the Islamic finance system. Finance refers to a system where the investment and the financing transaction are executed in a way that is compliant with the rule of Sharia. In Islamic finance system. The financial product include the maraba, mashriqa, hijra, maraba, sak, etc. After we discuss the prohibited in Islam finance, there is some kind of transaction that are the prohibited in the Islamic finance because as because of the dispute with the economics financial principle of Islam. After that we discuss riba. Riba it is refers to interest charge or loan in religious practice prohibit riba. It is the prohibit in Sharia law of the couple of reason. Like activities, all those activities which are the unlawful are the prohibited in Islam as well as Islamic finance. After that, we discuss the ethical and the moral values. It is the fundamental guidelines and the primary mission was the perfection how the people behave. After that, we discuss the profit and losing sharing. Madraba is introduced as an the Islamic finance technique in which the lender or the investment investor or the borrower or investment manager establish or the profit share and the partnership to undertake the business activity. Second, we discuss gambling. It is a betting or the stating or something of value over the conscientious of risk and of gain. Third one is we discuss speculation, investment in stock, property, etc. and of the of, gain in which the risk of the loss. And fifth one we discuss objective of Islamic finance. These represent four objectives of Islamic finance, and these objectives are the economics, Islamic, ethical, and the social. Last, we the object of Islamic finance are the important for the Islamic bank to serve to customer, well as therefore compulsory for the bank to keep these objects into the consideration will the offering different product to customer. Thank you. Now Almir Tasnif continue this topic and discuss the about the aspect in the Islamic finance.
Bismillahirrahmanirrahim. Assalamu alaikum to all. My name is Alvina Zasneep and today I'll be briefing the aspects of Islamic financing. Introduction. Islamic finance represents financial activity that is consistent with the principle of Islamic law or the Sharia, which prohibits unethical, immoral, speculative activities including interest, that is riba, gambling, that is nasir, and uncertainty, that is gharar. In Islamic financing, an Islamic bank is a banking business whose aims and operations do not involve any element disapproved by the religion Islam. While prohibitions are few and specific in nature, and some of which have been described by my fellow member, that are riba, speculation, etc. As our Prophet, peace be upon him, said, a time will come when one will not care how one gains one's money, whether legally or illegally. That is a hadith from Sahih Bukhari. So, as Muslims, we do not want to come under this category of people who do not care about such issues. There are scholars who go further and say that some aspects of Islamic finance are obligatory on us individually to learn if we are engaged in businesses and financial dealings, and they are listed as follows. So now moving on to the types of Islamic finance instruments. Number one is Mudarba. Mudarba is a profit and loss sharing partnership agreement where one partner, the financier, provides the capital to another partner, labor, the mudarib, who is responsible for the management and investment of the capital. Then the profits are shared between the two parties according to the pre-agreed ratio. Number second is musharka. Musharka is a form of a joint venture where all the partners contributes capital and share the profit and loss according to the calculated share. For example, business partnerships bear losses and share profits mutually. Number third is sukuk. Since the lending with interest payment is forbidden by Sharia, there are no conventional bonds in Islamic finance. However, there is an equivalent of bonds called sukuk. or Sharia compliant bonds. The bonds represent partial ownership in an asset, not a debt obligation. For example, government issues sukuk for infrastructures and etc. Number fourth is ijara. In this type of financing arrangement, the leaser, who must own the property, leases the property to the lessee in exchange for a stream of rental and purchase payments, ending with the transfer of property ownership to the lessee. Before moving on to the next slide, the question which arises the most is what is riba and why it is prohibited in Islam, and what why do we need Islamic financing? So the answer is the extra fees for borrowing is called riba, which is absolutely unfair and unjust because the lending party does not take part in the borrower's loss and want to maximize their profit regardless of borrower's situation. So alternatively, in Islamic financing system, for example, if you apply for a loan in Islamic bank, they would not give you a loan, but they will offer you finance for your business if you want to start one. In Islamic finances, they only talk about business finances and ways of financing for different business situations. For example, if you want to finance for a house, there are ways like ijara. If you want to construct a building, there is istisna. And if you want to upgrade your business, there is mudarba, musharka, and etc. Hence, always talk about a risk sharing model instead of risk shifting model. Now let's overview of some applications of Islamic financing in modern banking. Number one is Islamic banking. Islamic banking is a system of conducting banking activities in line with the principles of Sharia while avoiding all the prohibited activities such as interest. For example, mudarba for business financing activities. Number second is Islamic investment funds. Sharia compliant investments are those which follow the principles of Islam that they are free of riba, that is interest, and gharar, that is speculation. For example, investing in Sharia compliant stocks. Number third is Islamic microfinance. Utilizing the Islamic principles of interest-free credit, that is Qarzul Hasan, credit sales, that is Murabaha, and investments, Mudaraba. Microfinance provides people with the power to create opportunities for themselves as well as for others. For example, providing Qarzul Hasan for small businesses. So now we'll move towards opportunities and challenges of Islamic finance. The Islamic financial system has witnessed considerable developments in past 4 decades and now is regarded as one of the most fastest growing segment of the global financial system. But still somewhere in between, it faces a lot of challenges. And some challenges are Sharia interpretation standardization, awareness, and regulatory frameworks. And some of its opportunities are ethical investment demands, expansion into non Muslim markets, innovation in product services. Awareness of Islamic banking and finance is rising, and there is and there will be a universal demand for a fair and just system that is socially responsible and sustainable. Inshallah. Thank you. That's all from my side.
Assalamu alaikum to all. Let me introduce myself. I Aksa Kashif. Today I am here to share a history of Islamic financial institutions and its growth. The history is started when the founder of Pakistan, Quaid-e-Azam, shows his interest for the development of interest-free banking in the country at the time when Quaid-e-Azam inaugurated the State Bank of Pakistan. Initially, the main purpose of many laws and principles is to remove the interest which is called riba. Before 1970s, Islamic banking was almost unknown, but in the start of the 21st century, Islamic banking took place and became a reality. In the 1970s, the efforts were started for interest-free banking system. The Islamic banking in Pakistan was a gradual process which started in February 1979. The implementation was a result of several years' study and establishment of Islamic Ideology Council by the Governor of Pakistan. In 1981, the practical operation was started and Pakistan is one of those countries which started Islamic banking system at regional and national language. On January 1st, 1981, all commercial banks of Pakistan separately interest-free accounts had been opened. In 1984, the banks were restricted to close the dual window function. On January 1st, 1985, the whole banking and financial institutions based on fixed rate return. In 2004, the total accounts of Sharia compliant is growing 10 to 15% in worldwide. Islamic banking in the worldwide has established itself and growing at very fast pace. The Islamic banking size is expected to reach an estimated USD 1300 billions in the near future. Presently, across the 1200 Islamic banking is providing their services. In Pakistan, there is a solid platform related to Islamic banking in Pakistan. In 2000, State Bank was introduces the first Islamic bank. Islamic bank entrance creates a high competition with conventional banks. The difference between Islamic and conventional banks is due to their products. In 2002, the Mizan Bank is registered as the first Islamic bank in Pakistan. In 2010, Islamic banking deposits reached at 411 billions and the deposits of share value has increased 6.1 to 6.4%. The branch network has increased 667 branches and sub-branches. This growth of Islamic banking spread the entire country and the Islamic banking institutions have surplus of funds due to this rapid growth. We conclude that if we compare another country of the world with Pakistan, we can see that the growth rate of Islamic banking in Pakistan is very high rather than other country. And this fast growth is possible due to the support of the State Bank of Pakistan. Due to this support, Islamic institutions capture the reasonable market share and this growth shows that people are satisfied with the system. Now, thank you for your attention. My part has come to an end. Now, Waila is going to continue the further discussion about this topic.
Assalamu alaikum. My name is Waila Muin and I will be talking about the impact of Islamic finance on Pakistan. So it is true that Islamic finance has become an integral part of daily lives of Pakistanis, exerting a profound influence on various aspects of the economic activities. In Pakistan, Islamic finance has empowered women entrepreneurs to ethical funding solutions. Despite progress, access to finance remains a challenge. In response, the State Bank of Pakistan launched a groundbreaking gender finance policy in 2018. Through collaborative efforts, stakeholders are overcoming barriers like financial literacy, with tailored strategies for fostering a thriving ecosystem for women-led startups. In Pakistan, Islamic finance has revolutionized SME funding, tapping into a previously untapped market segment of 20 to 25% that avoided conventional banks due to religious belief. This move has unlocked billions in funding potential. Although challenges persist with limited Sharia compliant products, SMEs are increasingly drawn to Islamic banking, indicating a significant shift in demand. This transformation not only empowers businesses ethically but also fuels economic growth, positioning Pakistan for a prosperous future driven by financial inclusivity and adherence to religious principles. The ethical considerations in Islamic banking emphasizes the equality and marketplace justice, highlighting the importance of addressing the needs of unbanked poor. Islamic banks can enhance their market share and contribute to public welfare by addressing barriers to banking services adoption among the poor. Strategies for Islamic Bank to serve the unbanked poor include expanding branch networks to remote areas, providing educational programs to increase awareness, offering microcredit facilities, ensuring fair treatment by frontline staff, and leverage the concept of work for socio-economic development. And this has been shown in Pakistan as well. If we talk about the Islamic banking in Pakistan, challenges that has impacted the banking system, there is higher financial cost as compared to conventional banks, and there is lower return on investments as well. So the limited financing for agriculture and SMEs, that is 2.7 in Islamic bank versus the conventional banks that give up to 7.7% return, it hampers the sector growth. And urban concentration limits access to banking services, particularly in rural areas. Limited diversity in financing restricts access to specialized products. Higher spread increase borrowing costs for customers, and there is a lack of distinctive economic merits undermines the resilience. With that, our group has concluded the presentation. Thank you so much.